Hey guys, NIO is back at a incredibly low valuation and share price currently, as I've pointed out in a previous video, and the valuation equals on a enterprise value to sales metric that of when NIO was actually almost going bankrupt. Only that the situation currently fundamentally is quite different, right? And so of course in this time this brings up lots of questions regarding if there's something fundamentally wrong with the company, whether or not this is due to, let's say, those macro topics of worries about Xi Jinping around China, around Taiwan, around the US chip ban and all of those things. However, I think the main reason why we are selling off is in this chart here. That's the US government bonds 10 years out. And you can see here that this yellow line was preached, and that's exactly the day when we sold off more than 10%. That was a huge shock to the markets in general, anticipating a much higher move as it was followed further on. And it was not only Chinese stocks that have sold off. Yes, they were also, coming under the bus quite significantly, but also Tesla is down more than 50% from all-time highs. Also American names like UPST, all of them have also sold off quite significantly. Sea Limited, Indonesian e-commerce company, all of these companies have not this overhang of, let's say, what's going on in China. And so I do think that this was actually the main catalyst and could also be the main catalyst going down. Those rates will not go up forever. There might be a temporary high here around, let's say, 4.4%, more or less, and then may come back again until we have further data around the US economy, around inflation data and so on, and maybe possibly also a reaction by the Fed. Who knows? I don't think those rates going up that much, that fast are particularly sustainable. I'm thinking there might be issues in the housing market, especially in the US and Canada and other countries that have very high percentage of variable interest rates on their mortgages, which ultimately may even force policymakers to overthink the way that they are raising and if this is really the solution to bring down the inflation. But of course, everyone's looking for explanations, and one story that came up was in the Wall Street Journal, actually, interestingly, directly around Tesla earnings. So very well placed here, and always remember who's owning Asia Nikkei, Wall Street Journal, Financial Times, and so on. So, we need to read such kind of headlines and media articles with a pinch of salt, because they're basically saying here NIO, Li Auto, and so on are falling more than 10% because the Chinese brokerage CMBI suggests that inventories at car dealers are building up amid slower retail demand. However, I've looked into this article and it's actually speaking more of issues around the internal combustion car market. Those are now coming back online in terms of that the chip shortages are less and less severe, and so those models can be produced again. And it's speaking here of build-up at inventories at car dealerships. As you know, for example, Tesla or NIO, they don't have dealerships at all. They produce on the fly per order. And so, I would actually see that the EV market should actually grow in this environment. Those companies that have really desirable products out there in terms of pricing, product, something new, something exciting that people will actually want to buy, if they can churn it out in terms of having the capacity to actually produce those vehicles, I think they will be gaining market share. So companies, for example, like Tesla and NIO might be doing well in this environment. And so I don't currently buy this narrative of that this is the reason why these companies are selling off. It also makes no sense that it's only the Chinese EV makers there. And then also, just looking at the facts here, if you're looking at, we get this license plate data, but of course this is speculation and it's not one-on-one the deliveries and sales. However, we can compare previous periods with what's currently going on. And so by the end of August, going 2 weeks into September, NIO has, for example, registered around 6,200 license plates, while from a similar reporting period, and these are just the periods that we get, 26th of September till 2 weeks into October, there were like 7,500 license plates registered. That is roughly a 20% increase. And that is, although, and I mentioned that before, I'm quite conservative on October, because actually the 1st till the 7th of October were actually a national holiday in which it's still an open question whether or not the factories were running, whether or not they made deliveries during that time. It's very likely that there has been significant downside during those days. And so the Wall Street Journal reporting that it's not really taking that into consideration of if they are talking about that October deliveries are down, where in fact it points to that NIO deliveries could actually be up, and that would be quite interesting during October given those holidays. And so let's see what will be the real outcome. I think we'll see, of course, by the end of the month with the deliveries, but I just don't buy this as an explanation here. And I do think going forward, November, December should actually be good in terms of the actual deliveries. And for next year, we'll see how much those new models like the ET5 and the rumored new models that are coming out will actually give traction also in terms of growing. Tesla also just pointed out on their earnings call that they are sticking to the 50% year-over-year growth projections, and also around China. So that's my quick explanation for now. Watching the 10-year, watching the US dollar, currently that's the wrecking ball for all of our investments, and of course particularly for emerging markets and China, and for companies that are unprofitable. Let's see whether or not this will reverse at some point in time. It can quickly turn also into a catalyst if we see a change in the direction of that. So that's it for now. Thank you guys for watching, and see you in the next one.